Consider how many people come to this theatre on a single night. Consider how much money they spend. Consider how much wealth is generated from just one show. Until further notice, none of it will happen. The Arcola Theatre in London has closed its doors because of COVID-19. But it's not just the ticket sales and the wealth they generate that's been lost, nor a picture unique to this bit of East London. It's the 200 people and the drinks they buy at the bar, the meal that they buy before or afterwards, the hundreds of tube and bus and train journeys they use to get here and to get home, all from a single night on the stage. Multiply that by every other theatre across London, then Europe, then multiply it out for all the other cultural institutions and all the other sectors, and you have some idea of the economic ricochet that we're facing.
Obviously, it's a really tough call. The
theatre's executive director, Ben Todd, says the business and the arts overall needs help, and fast.
If we don't make any changes, we'll last a couple of weeks, if that. If you make really aggressive changes, then you could batten down the hatches and still be here. But in the meantime, you've lost your entire team, and how do you ramp back up again afterwards? We will need to have some money injected into the sector, and obviously I'd really like to know, is that possible and what's it going to be?
The situation the Arcola faces is repeated across the country, across most businesses.
How have the markets?
The new governor of the Bank of England, Andrew Bailey, started work today. It is an unenviable task he inherits. He will find thousands of Arcolas, businesses desperate to stay afloat, just at the time there are fewer levers central banks can pull.
Bridge this potentially challenging period.
You're obviously going to need both fiscal and monetary policy. I think conventional monetary policy is certainly nearing the limits. Interest rates are now as low as they can go unless you're going to go into the negative. I think people are talking. This might be a situation where you start thinking about helicopter money and the creation of cash in people's bank accounts.
A more active fiscal policy, government spending money directly, is certainly in vogue. Tonight, President Macron announced a €300 billion package to support the French economy. State intervention on a truly massive scale.
For our economic life, with regard to France, no company, no matter its size, will be subject to the risk of bankruptcy.
Today, I can go further.
It rather dwarfs the package Rishi Sunak announced in his budget 5 days ago, and it's not the only area Britain is proving less interventionist. Yesterday, the Danish government announced they'd pay 75% of the salaries of laid-off workers, so long as they're not sacked, and pick up the bill from businesses for sick pay. The Swedes announced a £25 billion programme where laid-off workers are guaranteed 90% of their income. And the Norwegians will get full pay for those laid off for 20 days, money for carers of COVID patients, and the self-employed will get 80% of their average income over the last 3 years. By contrast, Britain so far hasn't announced measures to guarantee the income of those who will lose work, and the statutory sick pay in the UK still only represents £94.25 a week. Barriers are going up across the world. The President of the EU Commission, Ursula von der Leyen, proposed new travel restrictions today. As we effectively deglobalize, every government will need to borrow more and find themselves more dependent on the most globalized industry of all, the international capital markets.
There is quite a lot of cash, if you like, and willingness to invest in, particularly in government bonds. Now, the question is, for how long? If the capital markets seize up, as they seem to do shortly after the financial crisis started, then there needs to be some reassurance from the governments, but also more coordinated with a number of monetary authorities and also the G7 saying that they will honour whatever it is that they have to borrow.
Governments around the world are racing to stabilise their economies as perhaps never before. The Chancellor is due to unveil a new package of measures tomorrow. The challenge for the UK will be to keep up before so many businesses and livelihoods simply disappear.